Well, with that, let's move on. Mahesh Patil, Chief Investment Officer at Aditya Birla Sun Life AMC, is with us now. Mahesh, good morning. Great to have you on the show as always. So there are a lot of things in the mix. There are US banks being downgraded. There is inflation data in India and in the US that's in focus. There's the policy today, and the earnings season has more or less wrapped up. When you put all of this together, what's the sense that you get? Are we in for some more upside, or do you think now it's time to consolidate the gains that we've made in the last 3 months?
Yeah, good morning, Surabhi. So I mean, there are too many events actually kind of happening in this week, and we've seen that overall on the global front, slightly I think there's some amount of risk off, which is starting to come up a bit. Nothing too dramatic, but again, the outlook there, especially in Europe and the US, the downgrades, what we have seen. So we don't see any major impact of that, but that clearly shows sign that you should not rule out any shocks, which could come in down the line, because the way interest rates are, while we don't expect any major increase further, but it's clear that rates are going to remain higher for a longer period of time. And that could mean that somewhere down the line, you could see some shocks coming up in some of these markets. And to that extent, I think at these levels now, while we have been positive on the market, I think the overall earnings season which has come in, though has been a kind of a mixed bag, but overall I think earnings growth still remains fairly intact. We are still seeing this year nifty earnings growth to be around in the mid-teens or so, which is very good. And overall, India's outlook in terms of GDP growth also remains very strong. So we are expecting around 6.5% GDP growth this year, which is actually higher than what we were looking at the beginning of the year. So I think India looks fairly good, don't see much of a risk, but I think at the global front, I think you could see some kind of hiccups. And in that context, I think you could see some consolidation or possibly some mild correction in the markets. But clearly, I think I don't think there's anything reason to worry about. I think market trend still remains up, and I think at least at this point in time, I don't see any of these factors. What we talked about is going to lead to any meaningful correction in the market.
Mahesh, what has been your sense about the rural demand from the earnings season? From what the companies had to say, what is the outlook on the rural markets?
So the rural demand is, there are some positive signs over there. It has been weak now for almost a year. And if you look at the commentary coming in from the auto companies or from the FMCG players, they are seeing some kind of green shoots over there. And also looking at the rains where it has been, while the spatial distribution has not been that great, but I think the overall rainfall has been good. So that should be fine. And we've seen that the rural wages, the real wages, have now started to improve a bit. And it's not about agri alone, right? We have seen good pickup in terms of construction activity in the urban side. So that means there could be good repatriation of income into the rural side. And given that, I think we would expect a recovery in the rural economy as we move forward. Also, being the election year, we've seen a lot of state elections this year and then the general election next year. I think you will see some money moving into the hands of the rural economy. I think that's what the government will do. So I think we remain constructive on rural recovery over the second half of this calendar and this fiscal year.
All right. Hi, Mahesh. But then how do you play it? I mean, do you play it via autos? Do you play it via FMCG? If the rural India is going to turn around, it will be good news. Your take?
So, yeah, I mean, the auto sector is something which we have been positive now for some time. We've seen a good rally over there across commercial vehicles, four-wheelers and two-wheelers. Having said that, I think the auto sector, the overall now the valuations there, at least what we see, the upside is limited, while the uptick could still continue in terms of recovery over there. Two-wheelers is where I think the if there is a pickup in the rural economy, then that's a sector which can see a further uptick, because two-wheelers overall sales are still slightly below the peak what we saw pre-pandemic. So that's a sector I think which could benefit more, I would guess. And even the staples, right, where the volume growth has been fairly weak. It's been in kind of a mid-single digit. So if that gets an uptick, and there has been some amount of tailwind on the margin front because of commodity prices coming down. So if the volume recovery happens, I think those could be the good sectors to really play the rural recovery.
Okay, that's on the rural recovery. Mahesh, what's been your key takeaway from the results season? Like you said, that it's been more or less in line, and you're still expecting earnings growth to remain intact. So tell us about any interesting trend that's come through, which you'd perhaps want to study further and maybe action upon in the coming weeks.
Yeah, so I think a couple of, if you look at the banking sector, the largest sector which is there, so there we have seen some amount of margin pressure. I think in a few banks, slightly disappointed on the net interest margins, and I think that especially some of the large PSU banks, okay, where you were expecting that the fall will be much lower. So I think that is where I think you could see some kind of a slowdown, not exactly a slowdown, but some downgrades to earnings growth in this fiscal year. Having said that, I think the asset quality, the trends look to be very good. So I think on the bottom line, I think you might not see much of a downgrades over there. Then another sector which we've seen strong growth has been the industrials and the capital goods sector, especially the power sector, right, related growth. So that's where there has been a good improvement in the order book. And execution also has been very strong. And you would expect that this year, at least until December or January, before the code of conduct comes in, you will see increase in the pace of acceleration in terms of execution for all of these construction and the government contracts. Okay, so that should be good for all the engineering and the construction companies. Pharma sector has also actually surprised on the positive side, more so on the US generic space, where we've seen that the pricing erosion which was there, I think that has kind of slowed down, and we have seen some upgrades to earnings on the pharma sector. So I think these are the trends what we are seeing. Consumption, discretionary consumption is still slightly weak. Okay, that's still taking some time to recover, and I think people are looking at the third quarter. The festive season also has got pushed down because of in this time. So that could slightly take some time to recover, at least one more quarter down the line.
Mahesh, getting back to that point about pharma, where you said there has been a positive surprise because the pricing pressure in US generics has been less than what the street was anticipating. Do you expect that to continue, or do you think it was a one-off, a little bit of a normalization? Is this something which could be a 1 year, 2 year trend?
So I think it's still early days. There was some amount of supply side disruptions which were there, which probably led to the increases what we saw in some price increases for a few categories. But I think the indications what we are getting is talking to the companies is that there is some amount of consolidation, okay, which is happening on the supply side. A lot of large US generic pharma players are now getting out of the market because it's become unviable, and that could mean that the some kind of a bargaining power going back to the suppliers rather than the buyers. So I think the pricing pressure, which was much intense earlier, we saw more than 10% increase on an annual basis. I think that clearly will moderate down going forward.
Okay, well, markets pretty much trying to hold, though the cut is a little deeper now, 50 points lower. 19,582 is where we are at. Mahesh, finally, when you also mentioned that, of course, discretionary consumption has shown slightly weak trends, and you're expecting a pickup only later in the year. How are you positioned on the sector between staples and consumption? What would you look at? And let me throw some of the internet companies like Zomato, Nykaa in the mix as well. Some of these, internet consumer companies. How are you playing the consumer?
Yeah, so while there is some weakness, what we've seen in the last couple of quarters, and probably one more quarter, but that's a space, the consumer discretionary sector is where we are positive on from a long-term perspective. We see clearly trends shifting over there, where structurally we see India, the discretionary consumption as a percentage of total consumption basket is going to steadily increase. because of the demographics, the premiumization, and also the fact that we've seen larger urbanization happening. So that's clearly a longer-term trend where we are positive on, and we think that despite the short-term slowdown, I think it's a good time to really build position in some of these names which have kind of rallied earlier. We've seen some correction, so there is some moderation in valuations, which is good as an entry point from a long-term perspective. So that includes consumer durables, the retail sector, and apparel. So these are the sectors where I think structurally we would like to build position, and that's one of our themes, okay, which we are positive on from medium as well as from a long-term perspective.
Okay, all right. Mahesh, thanks so much for stopping by and giving us a view on the markets as well as the way ahead. Look forward to chatting up with you rather soon.